While most investors were glued to the daily silver price flashing on trading screens, something far more consequential was unfolding quietly behind closed doors. Not in the futures pits, not on financial television, but in acquisition meetings, government offices, and mining boardrooms around the world. What we are seeing now is not speculation, it is strategic capture. Chinese state-backed entities are not focusing on silver bars or ETFs. They are targeting something far more important, control of the land where silver is pulled out of the earth. This week alone, multiple transactions were finalized that quietly transferred ownership and offtake control of key silver-producing assets across North America and Latin America into Chinese hands. This is not about buying product. This is about owning production. They are not purchasing the output, they are purchasing the source. And while this is happening, US regulators remain passive, distracted, or deliberately disengaged. Let's get specific. Over the past 2 years, major Chinese mining conglomerates have aggressively accumulated assets across Canada, Mexico, and South America. These are not random regions. They are the exact jurisdictions that supply the majority of silver imported into the United States. More than 60% of US silver imports originate from these areas. That means when China acquires control over these mines, it gains leverage over America's industrial bloodstream. These deals are not simple equity purchases. They are structured around long-term offtake agreements, contracts that guarantee Chinese buyers first claim and often total claim on future production. So even if the mine sits on North American soil, the metal never reaches US manufacturers. It moves straight from extraction to shipping ports, and then east across the Pacific. This is supply chain warfare. The US Geological Survey has been warning about this for years. Silver is officially classified as a critical mineral with national security implications. It is essential for electronics, defense systems, energy infrastructure, and advanced manufacturing. Yet despite those warnings, the United States has failed to secure domestic production or protect foreign supply routes. Domestic mining has been strangled by regulation, capital access has been restricted, refining capacity has been shut down. At the same time, foreign state-backed buyers are welcomed with open arms. This is not market failure, this is policy failure, and the consequences are severe. Modern American industry depends on silver, electric vehicles, solar panels, semiconductors, medical devices, defense systems. If foreign governments control the mines, they control availability, they control pricing, and during periods of political tension, they control access. Imagine a future trade conflict where silver exports are restricted, manufacturing lines in the United States would not slow, they would stop. This is not theoretical. History is full of examples where resource denial reshaped geopolitics. China understands this better than anyone. Their global infrastructure initiatives are not just about roads and ports. They are designed around mineral extraction corridors, railways, ports, and refineries built to funnel raw materials directly back to China. Latin America is being integrated into a resource supply network that bypasses the United States entirely. Old assumptions about spheres of influence no longer apply. Capital replaced military force, and capital arrived early. So why are these mines selling? Because years of artificially suppressed silver pricing crushed valuations. Mining equities were starved of capital, balance sheets weakened, access to Western financing dried up. That made them vulnerable. When prices are held down long enough, assets become cheap enough to acquire quietly, and someone noticed. Western financial institutions helped create this vulnerability. Suppression of price did not just damage investors. It exposed strategic resources to acquisition. This is the unintended consequence of financial engineering. It doesn't stop there. In Mexico, the world's largest silver-producing nation, mining laws are being rewritten. State influence is increasing. Foreign ownership rules are shifting. And behind the scenes, advisory roles are being filled by foreign consultants aligned with Beijing's interests. In Peru, political instability has disrupted production. Western investors hesitate. Chinese buyers step in, purchasing distressed assets at discounts. They are patient. They know that once stability returns, they will own the supply needed for global electrification and industrial expansion. The media largely ignores this story. It is complex. It does not fit sound bites. It does not trend on social platforms. But this is the story that matters. The ownership of physical reality is changing hands. As this happens, the implications extend beyond metals. If China controls silver production, it can influence settlement terms. It can demand payment in alternative currencies. It can weaken dollar-based trade systems. Resource-backed trade blocs are forming. At the same time, the United States holds no meaningful strategic silver reserve. It was liquidated decades ago. There is no buffer, no emergency stockpile. If a supply shock hits tomorrow, the US would be forced into the open market, competing directly with state buyers. That is not preparedness, that is exposure. Even refining capacity has shifted. Much of the world's ore is processed in China due to environmental restrictions elsewhere. That creates a choke point. Even mines not owned by China often send raw material there for refinement. That is leverage. History shows that resource scarcity breeds conflict. Energy embargoes triggered wars. Metal shortages will do the same. This is why silver's role is changing. For the individual investor, the message is simple. Supply is being locked away. Physical availability is shrinking. When production is captured, it leaves the open market permanently. Scarcity drives repricing. This also explains why smaller independent miners are becoming takeover targets. As major assets disappear into state control, remaining deposits in stable jurisdictions gain strategic value. But there is risk there too. Governments can intervene, assets can be nationalized, paper ownership can be overridden, physical metal cannot. That distinction matters. Official reports will continue to claim balance. They rely on incomplete data. They ignore private contracts and off-market flows. Physical movement tells a different story. Paper markets can promise delivery. Factories require metal. And when demand for delivery collides with unavailable supply, pricing systems fail. This is how paper markets break. What we are witnessing is not just a commodity cycle. It is a transfer of strategic control. The West accumulated debt. The East accumulated assets. That imbalance cannot persist without consequence. Silver sits at the center of this shift. The era of abundant, cheap silver is ending not because of speculation, but because ownership is consolidating. Resources are becoming weapons, and someone bought the arsenal quietly while no one was watching. The only silver you can trust is the silver you control. The board has been reset, and the opening moves are already over.
Hello friends, welcome back to my new video. So friend, while most investors were glued to the daily silver price flashing on trading scene screens, something fair move was unfolding quickly behind closed doors, not in the futures pits, not on financial television, but in negotiations, meetings, government offices, and many boardrooms around the world. What we are seeing now is not speculation, it is strategic capture. Chinese debt bucket entities are not focusing on silver bears or ETFs. They are targeting something far more important: control of the land where silver is pulled out of the earth. This week alone, multiple transactions were finalized that quickly transferred ownership and offtake control of key silver producing assistance across North America and Latin America into Chinese hands. This is not about buying products, this is about owning production. They are not purchasing the output, they are purchasing the source. And well, this is happening. US regulars remain passive, discard, or let's get speculative. So friend, this is my new and informative video, so please like and subscribe my channel. So friend, this is video only for education purpose. Thank you so much.